down once again. We're heading to levels that we haven't seen in around 8 months. In early August, we saw a gain of around 25% for the markets. So clearly a lot of concern coming through.
Hi, Eleni. Thanks for having me. Because actually the market has been quite bearish for some time now and still declined by 0.2% today. And volumes and value also declined slightly by about 2%. And I think there's still that very general caution by investors. Investors are still quite concerned about the current levels in the market, and we can see that in the trends in volume and value traded. And most of the activity really is still, most of the big trades we've been seeing are more of structured deals and not necessarily market-driven deals. And in terms of performance, even though the banking sector still didn't perform positively, I think the construction company was positive. It closed the highest today, and then the consumer sector closed negative. Was actually the worst performing index that's based on our index this today. And in terms of bids and offers, but the banks, a few banks closed at net bids today. Fidelity Bank closed at a net bid, positive bid. UBA as well, while Zenith Bank was one of the few banks that closed at a net offer today. But overall, there's still that caution in the market, and most local fund managers are not really comfortable with the market levels, and a few of them are currently trying to crystallize the gains that they've made so far, not allow all the gains they've made so far depleted before the end of the year.
Yeah, Muyiwa, just looking at the impact that the MPC decision is going to have on fourth quarter earnings for the banks, what is your view? Do you think we've been seeing like a massive re-rating when it comes to banks and of course what we have been seeing on the equity fund, the demand scenario that is playing out? Your view on that?
I think my view, the review is actually positive for the banks, because banks have been placing with the CBN at the 1% rate, and now with the 225 basis points increase, we would actually expect to see an increase in net interest margin for the banks. A bank like Zenith Bank closed the half year at 2.5 NIM, and would expect that to increase by full year with the review in the rates by 225 basis points. So I think overall for the net placers in the market would see a more positive NIM and positive earnings growth for such banks, and for the net receivers in the market, there might be some negative impact. But I think overall for the sector it's still positive anyways, because we'd expect to see some increase in yields for the bank. So fourth quarter earnings obviously would be much better than the third quarter for the banking sector.
Unfortunately we have to leave it there. Thank you so very much for your time this afternoon.